Good morning, Wall Street winners. It is Thursday, April the 4th, and we are looking at a very positive start to Thursday. The futures are all in the green and positive, as you can see here, and it's looking like we're going to come off of call it a down or slow start to the week or the quarter and bounce back into the green at the start, at the open, and hopefully carry us through to the end of the day and have a bit of a rebound here. So as we move away from the futures and go over to the Yahoo Finance app, what we're going to see right at the top here is you can see crude is off just a little bit, but OPEC plus met and agreed on keeping production at the same levels, trying to get towards $90 a barrel oil. So that should bode well for our oil stocks, which are already doing extremely well going into the after the first 3 months, going into the fourth month of the year. We can see here that at the bottom of the healthcare and retail list, Humana is starting to make a bit of a comeback. Might be an interesting options play here. I bought some long-term options, long-term being into early 2025 for $330 call price. Those have gone up about 8% over the last couple of days. So I think as that continues to recover into the year, particularly into earnings, if they have a positive surprise after the unexpected Medicare news in the US this week. So we'll see what happens there. The same could be true in terms of HCA and Cardinal Health and the other healthcare providers. Could be an upside options play there for a long-term call for a recovery. We get down into oil, and what we're seeing here is some strong growth in these oil stocks. So VLO hit 180 yesterday. I thought it might top out at 175. It's gone almost $6 higher. Looks like it's set to open higher pre-market. CVE is up at 28 and a half. MRO is up at 29 and a half, likely on its way to 30, 31, maybe even 32. We'll see what oil does. And even with crude slightly down and now recovered, it's 2 cents positive, but at 85 and a half. As that creeps up to 86, 87, the rest of these oil stocks are going to likely continue to climb up as well. So I'd look for something in here that has a decent dividend. If you get stuck and have to hold it for a little bit, but definitely stick with some of the bigger names, some of the proven names, and I think you'll be in a good position for at least a few percentage points gain in the next month, in the month of April or so. That said, there is unforeseen risks that could occur, but based on all of the risks that are out there now with the different wars that are taking place and the shipping issues in the Red Sea and OPEC Plus and what they're saying, I think we've hopefully seen all of the unexpected events already occur. And now we're likely into some upside. So that's kind of how I'm playing that. Pan W is still a favorite of mine, looking like it's going to bounce back. It dropped into the 260s. This is a super attractive buy. I think it's going to recover up today into the mid 270s, if not get back into the 280s. It's been on a bit of a downward spiral. I was in and out of Cloudflare yesterday, net, and when it bottomed out at the open, I picked some up and then sold it around the 10:15 hour and got out with a nice tidy little profit there of about $3 a share. That if it comes back down into, it doesn't look like anything's going to come back down today. So maybe instead of it coming back down, if you buy in, maybe after it corrects, sometimes what these stocks do is at open, they'll spike up based on where they are in the pre-market, but then before or around 9:45 to 10 o'clock, they usually come down a bit. Now, not always, but if they do come down a bit and the NASDAQ is still trending up, then it's a potential opportunity to buy in on that little dip and then sell it as it goes back up in the next hour or so, or throughout the end of the day, depending on how it moves. I think we're going to see some moves today in semiconductor stocks. So I think ARM, it's kind of been bobbling around in the 23 to 26 range. It closed at 25.31 yesterday. I think this is going to probably pop up into the 128, 129 range today. Again, all of this is just a guess, but just based on some of the positive energy coming into the market and things coming off a bit of a low or a pullback, I think there's opportunity there. Another one that's moving, say, $3 to $4 is On Semiconductor. So this down at the in the $70, less than 71 range, has the ability to get up to $74, $76 in the course of 3 to 5 days, and that can be a tidy little percentage profit there. Workday down at 268. I think this is a steal. I think this will get up to 280, 290, probably 300 by the end of the quarter, the second quarter. So that could be a nice 10% gain there, getting in at this attractive price. Tesla, I'd still really stay away from at this point. I think there's maybe some more bad news to come on that front, sadly. Meta, one of my faves, pre-market up almost $7.50, already up $9 yesterday. This thing was down at 480 a few weeks ago. It was a steal. Be careful in around the 515 range, because that's kind of where it's hit its peak in the last little while. So maybe wait for a pullback on that, and there will be a pullback. Or if it pulls back today and comes back down into the 400s, even the 490s, there might be an opportunity for it to correct back up at the 506 or 510. NVIDIA is up $10 pre-market, so this is again down in the 890 range. If there's continued momentum here, I mean, who knows what NVIDIA could do? It can go up as much as $60 in a day. So with the NASDAQ up 74 pre-market right now in the futures, if that opens at that level and then continues to increase and gets up into the 150, 200 range, it's likely that NVIDIA is going to move $20 or $30 today. Google's on a bit of a pullback. They announced this morning or yesterday that they're thinking about charging for some AI search features, and that's putting a drag on things. Although if they were to do that, it's going to boost their revenue significantly. So this might be a great time on a bit of a pullback here. If this comes down into the low 150s today or the high 140s, be an extremely great stock, in my opinion, to pick some up of and add to your portfolio. And then as we get down into financials, so SoFi has been doing really well, up 34 cents yesterday. So if you look at that in percentage terms, that was almost 5% move upwards yesterday from open to close. Like, that is an amazing gain. So take some profits if you are in that, and then again wait for a bit of a pullback there. I think what we're going to see in the month of April at this point, going into earnings, is we're going to see all boats kind of get lifted as the tide goes up. So it looks as though, at this point anyway, and I know it's early, that as we go into earnings season, which starts in about 9 or 10 days, we're probably going to see, with good earnings, stocks continue to appreciate. What we're hearing from the Fed yesterday, Federal Chairman Jerome Powell, saying that, the message is consistent. We're still looking at cutting rates. We're just waiting on when. But what we're starting to figure out is, with the economy as strong as it is, there's really not a need for the Fed to cut rates. So they're going to push this decision off for as long as they possibly can, to avoid disrupting any kind of growth and things that are happening, as well as disrupting the decrease in inflation that they're trying to achieve. So stocks that need rates to go down are not stocks that I would be putting my money into right now. So look for companies that are generating good cash flow, have good balance sheets, and make your investments wisely. In the financial space, this is something I'm now starting to look at. So things are starting to move here. I think with earnings coming out, if they are positive, Morgan Stanley could definitely get above $100. I think JP Morgan could go to 215 with good earnings, and likely to be expected coming out of JP Morgan. And then some of the other regionals could pop as well. You probably want to stay, I would stay away. I am staying away from regionals that focus and have a big percentage of their portfolio in commercial lending, because that to me is still a very risky area with mortgages coming due and interest rates where they are. There may be commitments and loans that these current mortgage holders will not be able to maintain at new higher mortgage rates. But looking at companies like Charles Schwab, well positioned as really less of a bank and more of an investment brokerage house, and then even Raymond James. I'm not loving Raymond James at 129. I think it's on the higher side. If we look at the price to earnings here at 16 times, and then we go back and we look at the price to earnings of say Morgan Stanley, which is at 17 times. Morgan Stanley, a much larger company, more diversified in what they do. I'm not sure those multiples are quite in alignment there. And then if you look at Goldman as an example, you've got multiples there as well of 18. So these are rich multiples. So you do want to be cautious here. And I'm still maintaining a strong cash position. So I do recommend getting in and out of these trades on a daily basis so that you limit your risk if some unexpected event does happen, which historically happens oftentimes in March and we didn't see anything. So, I mean, I'm always cautious now going into April and May that the other shoe could drop. And that could be bad earnings reports from a group of companies. So we never know what we're going to get out of earnings, but it does appear that it's going to be positive based on where we're at in the economy. So that's where we are today. Good luck with your trades. And if you like this, share it with someone you know and subscribe to the channel.